In this video, guys, we're going to look at ideas for range trading. Hey traders, warm welcome to you. Okay, so there are people out there who are going to say, hey, range trading is really easy. You've got a range and more likely they'll draw a nice perfect range for you like it's a sine wave. They'll say, hey, you've got this lovely little range, and the way you trade a range is you go short at the top, you go cover your short and go long, you cover your long and go short, and you are an idiot if you don't really get that. And listen, we know that in the real world, this is not the way it works, okay? Number one, very, very, very rarely, I don't even know if I remember a market that looks as perfect as that, so we can forget that for a start. But more than likely, this is what it looks like. It's a bit jagged, it tests highs a few times, it sometimes probes through highs, it sometimes probes through lows. Even this is quite clean, if I'm honest, but we do get this kind of stuff. The idea is that the price has stayed in a range for however long that is. Now, whether that's an intraday chart, whether that's a 1 year chart, whether it's a multi-year chart, the principle remains the same. And so people are going to say, hey, look, you just short at the top of the range, you go long at the bottom of the range. The trouble is that in the real world, very often we might get one or two spikes through, and it's very challenging and tricky to just hit it at that level. It's very unusual that it will adhere to that for a long period of time. So we have to come up with something else. Now, one thing we can do is we can start to use stochastics, right? But the trouble is with stochastics is that, you know, most of the time when we're at lows, they are going to be oversold. And yes, we can trade divergence, or stochastic divergence. It's not going to go deeply into how we would do that, but you could trade some kind of divergence, use that as a signal, and I think that's a good filter. That makes sense. And of course, an oversold signal is a good filter as well, but it still generally will flag up most of these. Now, I want to look a little bit deeper at perhaps price action. If I rub the board, we will look at some perhaps price action at the highs. I'll just rub the board, that top bit there. We can have a look and see where we could get short by limiting our risk, because I don't know about you guys, but I want to find a trade where I can limit my risk and it looks good. If it's got a good potential risk reward, I can limit my risk on it. I'll take that thing all day, every day, because that's my key criteria. Not whether I think it's a long or I think it's a short. It's where is the sensible place for a stop. Now, of course, if you're going short here, let's say it's broken through and you're going short there, where's your stop going to be? Maybe it could be 180R, but it's quite tricky to judge that. And same if you're just shorting it straight as it's touching here. How far is it going to blast through? So it's difficult to judge your position size. Do you have it just there? And of course, it would have pinged you out twice on that one. And maybe you get a real spike. You get the point. You might even get an extreme spike that comes back and it's just a rogue thing. And you need a few of those before it becomes an unprofitable system, because you've gone through 4 or 5 times. It's only you've done it 8 times. You get the point. So what do we do? What's the best way of structuring this? So one thing we can do is we can do this. We can wait for price to probe through and then come back. So if this is here, let's zoom in and pretend this is this action here. There's our level there. Assume that's green. I haven't got my green, but that'll do. We push up. Okay, now we push back through as soon as we come back through. So this is the key to it. It's not the tag of it. It's not anything else. We have to, 1, go through the resistance from the upside through, and then 2, the trigger is as we cross down. So it's very easy to put into place, and it's very easy to put our stops in. Our stop is going to be a few ticks above that high if we're on an intraday chart. If we're on a daily chart, use your own judgment and assess that. You just want it maybe a 1 candle length above or something. You don't want it in the stratosphere, because that's not the point of the trade. The point of the trade is that it's going to stay in a range, and that's what you're playing for. So if it heads off to the stratosphere, the thesis of the trade is wrong. So you want to stop there, and you can judge that for yourself. You guys are pretty experienced traders. Most of the guys subscribing to the channel have traded and have maybe seen range bound environments. If you haven't, go and check out some of the videos we've done on this channel that kind of discuss about stop loss placements and stuff like that. So going back to the point, then we go short. So it's very easy to systematically put in a sell, stop, entry. That's exactly what it would be. So once you've crossed that level, then you go into your broker and you say, okay, now let me put a sell stop entry. So that what that means is as the price comes through, it's going to activate a sell order. And if you're not already long, of course, that's going to make you net short. If you were already long, that would make you come out of the position. Again, go check out order types if you need to brush up on that. That's cool. So now we put a sell stop at that level, at this level here, and we can leave the trade, right? If the thing carries off up into the sky, we're not in, because this thing just carry on, hasn't pulled back, crossed through. We're not in, we're not caught, we're not worried about it. It's no problem. If it comes back through, it triggers our short entry here. It would trigger our short entry here. We didn't quite trigger our short entry here. Maybe it would if we popped through, but you know, I'm just drawing this for example purposes. The point is that we don't feel out of control with the trade because our stop is above that prior high. It's very systematic, very clear. The risk is manageable. The risk reward ratio is very clear as well. The first target is probably going to be the midpoint of the range. It's something that I quite like to do, is take some off into the midpoint of the range. And if you're feeling it, of course, the final target is going to be the lower end of the range. Now, you might even go extra aggressive on it and say, well, if it's broken through quite high and then pull back. So let's say, let's extend this a bit now. Can we still see the chart on the screen? We can. Let's assume we did this and we're in. You might even be Mr. or Mrs. Brave and go, you know what? That's a range break fake type trade. I'm going to look for a new low because this has sucked in a lot of longs and they're trapped. That's getting a little bit more advanced on it, but you get the point. The point is the entry's there. The risk reward ratio is very, very good. You've got an obvious reward. You've got a sensible risk. And it means that you're not concerned about this unless it matches that criteria. Because I see too many people doing this, and you know what? I've done it myself, guys. All these things we talk about in the videos, 9 times out of 10, I've made the mistake myself. Trying to do this, selling the highs and buying the lows. It's a range. I need to sell the highs and buy the lows. But getting pinged out with a stop, or you know, not sitting with it, or just taking a little bit off the table because I'm fearful it's going to break through, or just basically making a complete mess of the whole thing. Whereas in reality, you can systemize the approach. Whether it's going to pay out for you over that period of time, you don't know. But the point is you can cap the risk on it and it will work over a longer period. You can say, hey, if I use that rule, it breaks through, comes back up, then I take my entry, then I put my stop here. Now, okay, one thing I forgot to mention is if you're only breaking through by a few pips, you might have a rule that says it's got to go through by and close below, or it's got to go through by 1 ATR or something, so that it's got some stretch rather than just kind of ticking through by a pip, then coming back. Maybe it's got to go through one day and come back the next, or through 1 hour and come back the next. Just have some time between the two, you know, have some sort of sense on that one. But the point is, at least then it's structured. You know your risk, you know your reward, and you don't have to get psychologically involved, because these range bound markets were never really my thing, man. I'm not a big fan of these range bound markets. I prefer volatility, I prefer momentum, prefer trading bull flags, and the bear flags have made no secret. That's one of my favorite patterns, has been, still is. This kind of stuff isn't the best, but if you can do something with it and you think that, you know, over time that's going to make you pay you money, you can allocate a little bit of capital to it, right? You don't have to go you know, swinging for the fences on it. You can just have a little nibble on stuff like this. Very systemized approach, very structured. Once it goes through, you put your stop in, you put your exits in, you leave it. If it works, it works. If it doesn't, it doesn't. What's the most risk? It's that, which is times your position size is going to be absolutely nothing. So some ideas for range trading. Obviously flip it on the other side for the buy side. If it's going through the lows, we're going to do a buy stop to make us long. If we're not already, if we weren't already short, that'll make us net long. And again, scaling out into that. So that's ideas for range trading, guys. You know, people will say, hey, just go short the resistance, buy the support. Taking it one step further than that and recognizing it's not quite as easy. We need something a little bit more structured, a little bit more accurate, a little bit more, you know, defined risk. And I quite like this idea. If you've got any ideas on how to adapt this to make it better, then, you know, always interested to hear your comments in the comment section below. If you've got a little tweak on that, a little indicator that you like to add, or some other price action criteria, or you think this doesn't work, or something you want to comment on, you know, stick it in below. And if I see it, then you'll get a reply. All right, guys, good trading. If you're a subscriber, I appreciate your support. If you're not a subscriber, consider doing so for more stuff like this, psychology, setups, that kind of stuff. And a thumbs up if you like it. See you next one. Take care. Bye-bye.